Hello, everyone. Welcome to our weekly educational presentations. And in this week's educational class, I want to talk to you about a trading technique that really works. This is a great method you can apply to any market and any time frame. It makes absolutely no difference. I want to share with you an older chart here. Let's look at this older chart in Costco. As we can see, the stock had been steadily rising, right? Let's say you were long this, or maybe you were thinking about getting long, but then you know that you're in an uptrend, but you're also a candlestick trader. Let's say you took that $10,000 class on candlesticks, and lo and behold, what do you see here? An evening star pattern. Now, if you're not familiar with what this pattern is, it's a very negative pattern, meaning that you usually find this at the top of an uptrend, meaning that the trend is about to change. It's what's called a reversal pattern, meaning that movement is now going to reverse and now start heading to the downside. So you decide to take that signal and decide to sell it. And for the next day, you feel real good about yourself because now it's going in your direction. Well, here's what we're going to be teaching you today. That very same day that it started to go in your direction was actually not a sell signal at all, but according to this technique that really works, this was actually generating a buy signal. And in the following days, you could have potentially captured upwards of 35 points. So this is the subject of this week's educational presentation. We're going to be talking about a trading technique that really works. Now, we know that a lot of people are new to our methods or are new to trading this style, and that's okay because everything that we teach, everything that we have generated at Pro Trader Strategies and Specialist Trading is made to be extremely simple. That's why we created the PTS Primo charting platform that actually teaches you how to trade. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to our webinars that we give every week around this time, they're all free for anyone to attend. We're all about educating you because it's our opinion that we feel that's what's missing from most traders' trading plans. It's not the best system or the best trading strategy or the best indicator or the best time frame. Those are, sure, they're important things, but really what comes to mind when we're talking about how you can be a consistent trader is the education so that you can be your own person in charge. In other words, we don't want you to take your trading cues, to take your decision-making process from someone or something else. If you have the proper education, you're free to make those decisions yourself. And in my 50 years of trading, this is just basically what I've discovered, that traders that make their own decisions are the ones that are the most consistent traders of all. It's the traders that don't make their decisions, that rely on someone to tell them what to do, either someone on TV or someone in a chat room, or even an indicator or a system that just spits out buy and sell orders. Those are the ones that really come and go. So what we want to do is make all of our students around the world, and I'm happy to say we have students in over 115 countries and in every state in the United States. We want to make you consistent traders so that you don't just have a good couple of weeks or a good month, but a good decade. And that's our goal as an educator. And you'll see that in today's class. Now, before we begin, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are, as I just stated, first and foremost, an educational company, all examples are strictly for educational purposes only. Now, another way to get more education on a daily basis is to follow us on X, or formerly known as Twitter. There's our handle there, abbreviation for Specialist Trading. You may want to copy that down. Every day I post between 5 or 7 different snapshots of signals that our methods have generated, also bits of financial wisdom. So there's lots of great free information on a daily basis if you follow us on X. Also, if you'd like to get more content, as we're doing right now, you can subscribe to YouTube. We know there are a lot of people watching us on YouTube right now. Kindly hit the subscribe button and we'll have a lot more content via YouTube as well. Okay, with that stated, let's begin today's educational class. Now, I want to start out with something that my mentors taught me, and they said, Steven, the secret to consistency is simply to want what the market wants. I know that sounds overly simplified, but think about it. When you lose money, you want the market or whatever you're trading to do one thing, and the market does the opposite, right? Or vice versa, the market does one thing and you do the opposite. So the key to consistency is to simply want what the market wants, to be in sync with what the market wants, not to fight it, not to try and pick tops and bottoms, not to say that it's going to stop going down here, it will turn reverse, but to go with it. But that is really easier said than done. For example, someone looking at this would say, well, Steve, that's easy to see. Tesla, as this older chart of Tesla is showing, wants to go lower. So obviously I should be a seller, right? So the minute you sell it, look what happens. It changes and reverses and goes the opposite direction. And so it's not as simple as just saying, we'll just want what the market wants, because the market can change on a dime. So we need something that translates what the market wants to do. We need something that's telling us, because the market speaks really a different language than what we speak. So in order to get in sync with what the market wants, you need a tool that translates what the market wants to do. And that tool is the PET-D. You've heard me talk about it many free webinars that we give on Wednesdays. Also, it's a highlight of many of our classes and courses. It's one of our most popular trading tools. But for those of you who aren't familiar with the PET-D, let me share with you some of its highlights. It's a proprietary algorithm, and the reason why we've made it proprietary, or the rules are kept in-house, is because it's very difficult to calculate. When I first learned about this some 5 decades ago on the trading floor of the stock exchange where I worked, we called it basically the calculation, or the really difficult calculation, because it was something that you had to have a hand calculator and calculate it almost on a tick-by-tick basis. It was just too difficult to put together this algorithm. So we've, with the help of outside programmers and with a lot of high-speed computers, we programmed this into a color bar tool. So it makes it simple. And all it does is simply color the bars, either green or red. That's it. And so bars will either be colored green or red according to the proprietary algorithm. Now, we can use it in its most simplest form as a signal confirmation tool. It can confirm any signal that any strategy generates. It can tell you whether you should be taking it or whether you shouldn't be taking it. But in today's class, we're going to be talking about it as an early trend detector. All right, this is where it's going to be helping us the most. So let's see how we could have applied the PET-D to that chart we looked at earlier, that older chart in Tesla, and see how it could have helped us. Obviously, most people would have discovered right about this time that Tesla was going lower, and they said, okay, well, I'm either going to sell my shares or go short. And just when you think you're doing okay, it turns around and goes back up. Well, let me show you how simple it is to apply the PET-D. On our platform, the PTS Primo charting platform, just click on the PET-D right here in the green upper strategy tab, and the bars will automatically change either to red or green. And as you can see, the beauty of the PET-D is that it tells you which direction you should be trading. And once you know, you can apply any technique that is in sync with that direction. So rather than knowing that, well, it's safe that the market wants to go lower here, we knew way up here in advance, because we had consecutive red bars, PET-D colored red bars, that it wanted to go lower. And instead of waiting and saying, wow, we've got a loss on our hands by being short and getting back in somewhere here, we knew well in advance down here with consecutive green bars that it wanted to go higher. So with that stated, showing you how simple it is to apply the PET-D, let me share with you this trading technique that specifically relies on applying the PET-D. All right, here are the buy setups. And don't worry if you don't understand this right away. It's really simple, but if you don't copy this down or get it, don't worry. I'm going to show you a lot of examples. Also, this presentation is being recorded, as all of our presentations are. So each and every one of you will get a link to this recording. You can study it at your own leisure. But here are the rules for buys. All right. 2 consecutive green bars are generated. All right. So we want to see 2 bars, bar 1 and bar 2. And then once you apply the PET-D, you see that they're right next to each other. They're both colored or outlined green. Now, the reason why we made this a generic chart is because these could be 5-minute bars, they could be monthly bars, they could be crypto, they could be currency pairs, or even stocks. It makes no difference. But you have 2 bars next to each other, bar number 1 and bar number 2, and they're both either colored or outlined green. Now, green bar number 2 closes below the low of green bar number 1. So we have green bar number 2 right here. Now it closes below the low of bar number 1. Where's the low of bar number 1? Right there. And as you can see, we closed just below it. So what does that mean? Well, that's a buy setup. That's it. You can either buy at the market or place a limit somewhere, wherever you'd like. but that's telling you this should be bought. And that's it. That's how simple it is. Now let's look at the opposite side of the coin for sell setups. The same thing, we're just going to turn the rules upside down. We want to firstly find 2 consecutive red bars generated right next to each other. So now we have 2 generic bars here. Once again, makes no difference what time frame or what market they are. But once you apply the PET D, you see that they're right next to each other. They're either colored or outlined red. And now red bar number 2, the bar on the right, closes above the high of red bar number 1. So here's red bar number 1, and here's the high. We want to see that bar number 2 closes above that, and obviously it did. So if these conditions are met, that is a sell setup. You can sell at the market, you can place a limit, you can do whatever you want, but that should not be looked as some type of a buying opportunity. The PET D is telling you, it's translating that even though we may have had an update, just as we did here in bar number 2, it's outlined red. And meaning if it's red, well, the market still wants to go lower, has some room to the downside left. So let's share with you some recent technique examples showing you how you could have applied this if you had the PET D. And remember, everything you're seeing today is easily displayed with one tick using the PTS Primo charting platform. I developed this with proprietary strategies that actually made simple all of our techniques, and it actually teaches you how to trade. All right, let's look at this chart here in crowd, CRWD. This was just about a month ago, maybe a little less than a month ago. As you can see, the stock is going higher. But at this point, let's say you listen to some guy in a trading room, or maybe some guy on TV said, well, it's going up well, but it's a little bit overbought. Maybe you want to sell some shares, or maybe you want to even think about going short if you're an aggressive trader, okay? And for the next 2 days, it looks like it is going lower. And you say, wow, why didn't I sell my shares? Why didn't I get out with a nice profit there when it was looking overbought? But is it really overbought? What is our translator saying? Here's the process you would go on our platform. Simply click on the PET D, and it automatically changes the colors. Now, even though we had 2 down days here, what color are they? The bars are colored green. So even though the market was down for the past 2 days, the PET D is still saying, no, there's upward momentum left, and we still want to go higher, okay? And now looking at the rules of the technique I just shared with you, we have 2 bars next to each other. We want to see a bar that closes below the low of the previous bar. Okay, well, we have 1 and 2 right here. Here's bar number 1. Did we close below the low of that? Yes, we did. We closed here, so that's a buy. So where you think that maybe this was oversold and starting to go lower, you should maybe buy some puts or sell your shares. You should actually be thinking about buying some more. And this was just about a couple of weeks ago. And now let me share with you a really simple exiting technique. We have upwards of 6 or 7 different ways to exit any of our strategies or methods. Here's just one of them. Once you decide to buy, you would look at the most recent high, which is right here. And you would exit on the first bar that closes above that. All right, so let's see. The next bar we didn't, but we started to go up. And here's the next bar. Well, we closed above that. So that would be your exit, and that would be a clean 20-point potentially you could have gained in just 2 days. See how simple that is? Now, this 20 points that you could have potentially made was not made using any type of complicated system or algorithm. It wasn't meant relying on earnings or some economic indicator that came out or some economic policy. No, it was just based on wanting what the market wants. Remember, everything you need to know is right there in front of you on the chart. The only trouble is we're always taught to learn and listen to something else. We always listen to some guy talking on TV, listen to the economic news, listen to the earnings, but we never really focus on the chart in front of us. And shouldn't that be the focus of all of our trading? Because absolutely, that's the source of what we're trading. Shouldn't we be focusing on the source? So that's why everything at Specialist Trading focuses on what you're trading on, market behavior. And so that could have been a clean 20 points in just a couple of days. Now, this is not a guaranteed exit method, guaranteed to get you out at the top, because as we see here on the very next bar, it even went higher. Now, new students that haven't been long to trading often say, well, Steve, I got out, but look at, I left so much money on the table there. Sure, sometimes it will happen, but also oftentimes you'll see that that is a really opportune place to exit. So this is just one of our different exiting methods that we teach our students. Let's look at another example in Lulu. Once again, this was just about a month or so ago. Stock is going straight up, and all of a sudden it starts to head in a downward direction. Looks like the trend has totally changed, right? This is the time to get out. It doesn't look very good at all. The last 3 bars have either closed down or unchanged. It doesn't look well. But what is the market translating? Remember, we don't care about economic news or what someone is saying about overbought, oversold. What is the market telling us? Well, we click on our translator, the PET D, and it's saying that even though the last 3 days have not been that good, it wants to go higher. There's still room left to the upside. So we want to find that 2-bar pattern. All right, so looking as it's been going up, we haven't seen that a bar closes below the previous bar. But right here we have that pattern. Here's bar number 1, bar number 2. We close below the low of bar number 1, so there would be a buy setup right there. Now, the next 2 days even went lower, but guess what? We had the same pattern, bar number 1, bar number 2. So you had 2 chances to buy here, all right, Lulu. And if we use that exiting technique, once again, we would simply draw an imaginary line across the top, the highest bar, the most recent high. And in the next week or so, we could have potentially captured 24 points, exiting at the first bar that closed above. And once again, look what happened right after that. How about this example in Charter? Okay, this was just about 3 weeks ago. Stock is definitely headed lower, right? But at this point, it looks like maybe it made a bottom. Maybe we are stopping there. We have a kind of a pivot low being made. Perhaps this is support. Maybe you took that $10,000 course in institutional support. And so you say to yourself, gosh, this has got to be some basic, all the institutions are buying here, so I've got to buy too, right? Once again, this is the way we've always been taught that we should take our cue, our decision-making process from an outside source. I traded with the institutions when I was a specialist on the trading floor, and they had the worst track record of any other traders, any other trading group that I ever traded with. So I would run like crazy. That would be the largest red flag to know that I want to be in sync with the institutions. So I don't care if there's support there because they're buying at the moment. I would rather take my decision making from the market itself. So what is our translator saying? Well, click on the PET D and the bars automatically change. And even though this bar was green, all right, these bars were green before, look at the last 3 bars are red. Now, do we have that 2-bar pattern? Does bar number 2 close above the high of bar number 1? Well, no, not there. But what about right here? Bar number 1, bar number 2. Here's the high of bar number 1. Yes, we closed above there. So that is a sell. So where everyone else is saying this is institutional support, this is, where you got to buy, we're giving you a sell signal based on market behavior, not based on what some big bank is doing. And where would we exit? Well, we draw an imaginary line or place a line right here, the most recent low. And if we close below there, that's where we'll cover our short, or that's where we exit our puts, whatever we decide to trade. And in 2 days, guess what? What happened to that support? It went through it like a knife through butter, right? And if you would have exited, that's a clean 15 points that you could have made being short. Or a lot of students like to use the sells not to go short, just as an exiting tool. So let's say you were long this, and maybe you had a loss in your hand. You could have used this as a way to get out and save yourself 15 points more in losses. Let's look at this example here. This is an INTU, okay, into it. Looks like a directionless market, right? Going just sideways. You don't want to do anything here because it's not doing anything, and you're just going to tie your money up for a long time. But is the market itself telling you that it's directionless? If we click on the PET D once again, we see that all of the bars, not just 1 or 2, virtually all of these bars are colored green. So even though we may have been going sideways for the last 2-3 weeks, the PET D translator is telling us that we want to go higher. We are building up or coiling into a nice upward movement. See how beautiful this tool is, the translator, where most people, most traders, they would never see this. But the PET D is not only telling us, it's screaming to us that it wants to go higher. So therefore, in order to enter, we can't just buy at the market because we want a little structure. We look for this 2-bar pattern. And we see it right here. Here's bar number 1, Here's bar number two. Bar number two closes below the low of bar number one. Now, it didn't do that anywhere else except right here. So we could have gone long on the close of this, or maybe a little lower, or maybe we waited for it to bounce back. It's entirely up to you. Now let's look at the most recent high, which would have been right here. So let's say we'll sell once it gets and closes above that most recent high. Not just trades there, but has to close there. Well, guess what? What happened to the sideways market? Now, this is why traders always complain, because they say, gosh, the thing broke out and I didn't know and I missed it. I'm not going to buy it here. Well, if you would have used the PET D in this technique we're teaching you today, you could have gotten in a full 2 days in advance and possibly and potentially captured 55 points. That's the simplicity of trading when you're not relying on outside sources like, jobless claims or inflationary news or what somebody's saying on TV or what someone's saying about earnings. You're just listening to the market. Now, I know it's difficult. I was trained the exact same way. When I first started trading nearly 5 decades ago on the floor of the stock exchange, I was taught the exact same things you're taught. I was taught to listen to all these things. I was in charge of making markets in roughly about 60 stocks. I had to know all the earnings estimates. I had to know the inner workings of the companies. And guess what? I knew all of that stuff. And I couldn't make a dime my first year or two trading. In fact, I thought I wasn't going to be on the floor much longer because I couldn't make any money. It wasn't until my mentor saw how much I was struggling and they said, listen, Steve, you don't really need to focus on those things that much. If you have to, go ahead, but keep it to a minimum. All you need to understand is, what does the market want to do? And they taught me all of these same secrets that I'm teaching you. And this is what has sustained me now for nearly 5 decades of trading. And as we can see here, nothing is written in stone, because even though you could have exited with a nice 55-point gain, the stock went higher. So we just want to share with you that even using this exiting technique, it's not guaranteed that you're going to get out at the top. All right, here's an example in KLAC. Stock is going lower. Now it starts to firm up. Did it make a bottom? Well, not according to the PET D. The bars are all red. And if we look for that 2-bar pattern, what do we have here? 1, 2, we close above. That's a sell signal. This is our most recent low. So we will cover our short once we close below that. Doesn't have to just simply trade there. It has to close below there. And look what happened the next day. All right. What happened to that bottom that was firming up? We had 1, 2, 3 upward days. All right. The PET D was screaming that, no, we want to go lower. So don't get fooled by the last 3 days action. And you could have potentially captured 65 points. Or as I stated earlier, if you don't like to go short or buy puts, if you wanted to use this as an exiting tool, you could have saved yourself a 65-point loss in the next day. This just happened a month or so ago. Now, let's look at this example in the Swiss franc for all you currency pair traders there. A lot of traders always say, gosh, looking back in hindsight, this thing has been going lower. How could I have taken advantage of this, though? Well, it would have been simple. Apply the PET D, and it's telling you all the while, all the bars are red, that it wanted to go lower. And you find a pattern here where you could have made a very quick 80 pips. Once you take your profits, you have another setup here where you could have made now 100 pips. And you had 2 more chances to make roughly 140 pips, excuse me. Altogether, you could have made potentially roughly 300 pips or close to $3,000 just trading 1 unit in this short 3-week time span. Or looking at this in hindsight, here's a nice upward chart of Netflix coming into this month, June. Once again, people always say, gosh, I wish I would have known this thing was going higher. I had no idea. And once it was going higher, I didn't know how to get into it. Where would I buy? Well, with this technique and the PET D, it makes it simple. You simply apply the PET D, and you see that all the bars have been green for a while. And right here, you had a buy. Okay, we closed right here, closed below the previous bar. Here's the high. That's 68 points you could have potentially made in roughly 3 days. Here's another example here. You closed below the most previous bar here, green bar below, and you closed above that most recent high. There's 25 points. So now we're looking close to 95, close to 100 points. And once again, this bar closed below the bar of bar number 1. Here's the most recent high and 35 points. So we're talking about 125, 130 points you could have potentially made being in the trade no longer than 2 or 3 days. since just roughly about a month ago. Do you think this technique could help you trading? Here's a 15-minute chart of Tesla. We know that not everyone trades daily bars, so let's say you're an intraday trader. Well, this just happened June 10th, which was just roughly about a week ago. Okay, the same process applies. Nothing changes because we're looking at a different time frame. This bar closed below the low of this bar, so that's your pattern right there. Here's the most recent high, and once we closed above that, that's a quick 6 points in roughly less than an hour. All right. The bars remain green. We're looking for a bar to close below the previous green bar. This one did. All right. So you could have bought on the close there. Here's the most recent high. And in a couple of hours, there's 5 points. So in one day, there's a nice 11-point gain with real limited risk, very simple to trade, and very easy to identify. All right, now we can go out to a monthly time frame. Let's say you're an investor and say, well, Steve, this is great, but I like to invest. I'm not a trader. I don't look intraday. I don't trade currency pairs. I don't even look at daily bars. I like to look at monthly bars because I'm holding for the long haul. Nothing changes because we're doing that. We see all the bars are red here in team, all right? And let's say you were long and you really didn't want to be long anymore because you didn't like this downward action. Well, rather than what most people were doing on a monthly time frame, thinking like, hey, we bottomed out, you know that this is a sell signal. Because you could have exited your long-term position and saved yourself in the next 3 months 115 points. And then you could have gotten back in once the bars turned to green, okay? Or if you're a swing trader, let's look at APP. This is a real perfect example here, looking at an example on a weekly chart. Each one of these bars is a weekly chart, okay? So we're going higher, all right? We've been heading higher. Let's say you say to yourself, wow, okay, we're going higher, but now we have a down week. And you say to yourself, oh, that doesn't look good. That looks like we just reversed. Maybe we've made a top. Well, have you really made a top? This is why you need the PET D. The first thing you do is click on the PET D in our green strategy tab. This is how simple it is. And the bars will change color. And even though the last week was down, what color is it? It's green. So the PET D is not translating that it wants to go lower. It's still saying, nope, we have some room left to the upside. Until I turn red and have 2 to 3 bars turning red, this still wants to go higher. Okay, now let's look for that 2-bar pattern. Is there a bar that closes below the previous green bar? Well, we have bar number 1, bar number 2 here. Here's the low of bar number 1. Did we close below it on bar number 2? Yes, we did. So rather than thinking that way, I think we've topped out here, that's a buy signal. And if we want to use this simple exiting technique, there's the top there. And in the next month or two, there's your exit. 190 points. Why? Because it closed, that's the first close above the most recent high. And that's it. Not bad. 190 points, not bad for less than 2 months of trading, right? And once again, look what happened after that. So that's why so many of our students like this exiting technique, but we have so many more that you could have applied as well. Now, if you're a more aggressive trader and you say to yourself, hey, I don't mind going short or buying the puts, well, look what we have here. Now that the bars are red, we want to look for a bar that closes above the previous red bar. And what do we have here? Bar number 1, bar number 2. We closed above there. We could have sold and in 2 more weeks made possibly 80 to 100 more points on the downside if we wanted to. Okay, let's recap what we shared with you today. For buy setups, you want 2 consecutive green bars generated, and bar number 2 must close below the low of green bar number 1. That's it. That's the rule. That's how simple it is. For sell setups, 2 consecutive red bars are generated. And now you just want to see that red bar number 2 closes above the high of red bar number 1. That's a sell setup. So ask yourself, 2025 is half over, if you can believe it. In just the next week or so, we are officially half over the year. Do you think this technique can help your trading for the remainder of the year? I think your answer is tremendously yes on this. So we have a great attendee discount for all of you attending today's educational presentation. We're going to offer you what we call our roadmap for any market, any time frame. That's the PET D, all right? This is our proprietary color bar algorithm. You can apply to any market. Now, In this course, you're going to get two continuation trading techniques. These are entirely different from what I just shared with you. You'll also get two pullback trading techniques. You'll also get a trailing stop technique. Now, you can use this to confirm your current strategy, which is an entirely different use we've talked about in different webinars. We may, in the upcoming month, be talking about how to do it that way. But there are so many uses. There are literally dozens of ways in which to apply the PET-D. Now, up until this Friday, which is just in the next 3 days, we're going to offer you an entire full year, 12 months, absolutely free, because you'll need the platform for all of these different advantages. You can scan for PET-D setups. You can see with one-click access where the bars are, automatically green or red. But there's so many other things included on the PTS Primo charting platform, like our enhanced buy-sell line, which automatically tells you 4 different ways what the overall trend is. You'll also get a strength of trend tool, which identifies whether a trend is running out of steam or not. You'll get different entry levels and stop placements, as well as auto-generated exit levels. These are all separate and different from what I shared with you in today's class. And lastly, you'll get personalized tech support. Now, this is just the tip of the iceberg of what's included on the PTS Primo charting platform. There are literally dozens of different techniques and methods on the platform. I don't have time to go into, or this presentation would be over a couple of hours long. There's just that much that's included in your full free year of the platform. Now, if you're still not convinced, if you still think that, well, do I really need this? I kind of understand that technique now, where bar number 2 needs to close below the low of bar number 1 and vice versa. Why do I need the PET-D? Well, if you think you don't need the PET-D, let me share with you a couple of examples. All right, here's an older example in VRSN. All right, obviously we're in a downtrend, right? Or are we? Because look what happens after that. Well, it appears that we have broken that downtrend. But if you use the technique I share with you, what do we have here? We have bar number 1 and bar number 2. And bar number 2 has closed above bar number 1. So you say to yourself, this is obviously a sell setup, because most likely these bars are all being colored red by the PET-D and this one too, so I'm going to sell. All right? After all, you don't need the PET-D. And then look what happens. It goes straight up. Now, if you had the PET-D, it would have been as simple as, before you decided to do anything, simply click on the tab. You would not have sold. Why? Because bar number 2 was green. Remember, these 2 bars need to be colored red. Let's look at another example. Obviously, we're in an uptrend. And if you think you don't need the PET-D, you say to yourself, well, obviously, these bars must all be colored green, right? Now, we have a bar here that goes down and looks like it broke that uptrend. But most likely, that bar is still colored green. So we have that 2-bar pattern here. Bar number 2 closes below bar number 1. I'm just going to buy right here, because most likely all these bars are still green. This is too strong of an up move. So what do I need to buy the PET-D for? Well, look what happened after that. Went even lower, and it appeared to bounce a little bit. And you say to yourself, okay, I'm going to buy some more because it looks okay now. And then goes even lower. How could this all have been avoided? By simply being a student of mine in the PET-D, clicking on PET-D on our platform, which you get for a full year. And you would have seen that this bar was colored red. So there's no reason to think that that 2-bar pattern existed, because both bars need to be colored green. That's the first rule. So you would have saved yourself a tremendous loss there. So do you now see why you really need the PET-D? It is the best thing I have traded in my nearly 5 decades of being a trader, that really translates what the market wants to do on a tick-by-tick basis. Okay, so let's break it down. Our roadmap for any market, the PET-D tool, normally sells for close to $5,000. That's the PET-D course and the application. And if we include the platform, a full year of the platform, well, we're bringing the price up to close to $6,200, okay? Here's what we're going to do. We're going to slash that price and include both for just $39.95, okay? $39.95. You're going to save close to $2,200. Now, we realize that $39.95 may still be too expensive for some traders. That's okay, because we have an alternate way of purchasing this course. There are payment plans available, but for a limited time only. So instead of paying the $39.95, you can have a one-time down payment of a fraction of that cost and just established a monthly payment plan. And you can be up and running as early as today, just as if you spent the $39.95. And included with either way you decide to purchase, either by paying in full with that tremendous $2,200 discount, or by establishing a fragment of that cost and establishing a payment plan, you still get a full year absolutely free of the platform. Here's how to take advantage of this great offer. Contact my sister site, which is ProTrader Strategies. The best thing I would highly recommend to do is to give them a call at area code 310-598-6677. Trading consultants now are there manning the phones. They would be more than happy to either answer any question you may have or take your order over the phone. And they would be more than happy to establish a payment plan, or they can actually give you a quote. So if you are thinking about it, and you say, well, listen, if I put down a deposit of this, how much would my payments be for a month? And so they can give you a quote and you can think about it. The only thing I would suggest is not to sit on it too long, because once again, this is a limited time only offer. And the two things will change. That $39.95 will go back up to close to $6,200. And the small payment plan will go back up to the original price as well. So if you're really serious about coming on board with the Pet D, now's the time to do it. Remember, as we stated, the year is half over. I can almost guarantee that the majority of you in class today are not seeing the type of results that you thought you'd see at the beginning of the year. That's okay. That's perfectly normal. That's roughly about 80 to 90% of all traders are experiencing the exact same thing. But here's your chance to turn things around, okay? Contact ProTrader Strategies. Give them a call at area code 310-598-6677. Now, if you have any questions, now's the time to ask. Kindly go to the chat box. If you go there on the little Zoom icon slide there, you'll see the chat box or the question and answer. You can type anything in and I'll answer it to the best of my ability. Let's see, does this strategy perform well in different market conditions? Yes, one of the best things that you'll find with the Pet D is that it keeps you out of trouble, meaning that you won't find consecutive green bars or consecutive red bars, more than one or two in those choppy markets. And we all know that choppy markets are very difficult to trade. So if you have a choppy market, regardless of what time frame, regardless of what you're trading, you'll see a series of red, green, red, green, red, green, and that's not enough to set up any type of structure. So that's why this is really good for keeping you out of trouble. Now, it's not guaranteed to keep you out of 100% of the time, but it's a really good filter, and it's a much better filter than anything I've ever seen, okay? So yes, it can work in all different market conditions, and it can filter out a lot of those bad market conditions. The exit method that you showed, is that the only one? Oh, no. In our courses and in all of our classes, we offer you upwards of 6 or 7. That's one of the 7 different ways in which to exit. There are a lot more. If you'd like to stay in the trade as long as possible, we show you how to do that. If you want to get out quicker, we show you how to do that. There's lots of ways. So you can even track the trade if you like. So I just shared with you just one of them. And on our platform, we have an auto-generated exit, or exit levels actually, that is an entirely different way as well. So there's more than 6 or 7 different ways to apply exits in all of our methods, okay? And you can apply those. Can you trade ES or NQ? Those are the E-mini futures and the NASDAQ futures. And what time frames intraday for day trading? Yes, you can. In fact, I personally use this technique trading them because, as I've stated many times, I trade the E-mini futures. The best time frame is the one that makes you feel the most comfortable, because we have traders that swear by this on a 15-minute time frame, and they say, Steve, this works amazing. And then we have other traders that say, no, this works great on a 2-minute time frame. Now, it doesn't mean that one is right and the other is wrong. It all means that what feels most natural and most comfortable for you. The person trading the 2-minute time frame may trade 20 times an hour, where the person trading a 15-minute time frame may trade once a day. So what makes you feel comfortable is the best time frame. One person's time frame is another person's worst time frame. So it all depends on what you like. But yes, it doesn't matter. You can apply it to anything you like. Okay, it works well. And I trade the E-mini futures, and that's what I use this on. I personally apply this to the E-mini futures. Good questions. Any more before we sign off? Remember, this is a limited time offer. If you're really serious about that, just give ProTrader Strategies a call. There's absolutely no obligation. You can call them at 310-598-6677. They're there to work with you. They're very flexible, as I often state. So don't feel obligated you have to purchase anything. My only suggestion would be that if you are serious about this, don't wait for a couple of weeks or even a couple of months the way some other students have done in the past. They'll call back Pro Trader Strategies 2 months later and say, you know what, I want to take that $39.95 offer, and that's already gone. It's back up to $6,200 or not even more. So if you're serious about it, give them a call and make your decision within the next 3 to 5 days, okay? Okay, if there are no further questions, this brings us to the end of today's educational class. I hope you learned something, but most especially, I really hope you saw our attention to detail and how we really want to educate you. We're different from other webinars you may have attended in that we really want you to become a consistent trader. There is more than enough for everyone to go around. Every day, there is an unlimited amount of profits to be taken. It's up to us to teach you how to do that. So don't feel as if there's a limited source. It's just unlimited. So there's enough for everyone to go around. Come on board, be a student of mine, and hopefully we can make you a consistent trader. Thank you so much for attending today. We wish you all the best of luck, and I look forward to all of you becoming students of mine in the Pet D course. Thank you so much. Have a great day. Bye-bye.